What's up, you guys? Zoeb here from OneGlanceTrader.com, and in this video I'll be walking you guys through 3 secrets for better stop loss placements. Now, it's one of the biggest questions I get around: where is my stop loss strategy? How does it work? Where do I place it? And what things I take into account? And I'll be going through all of that in this video. All I ask for in return is that you like this video and subscribe to the channel. I post weekly content around indicators, trading strategies, and everything else in between. So I really hope this video provides some value for you. So when it comes to stop losses, the train of thought that I go after is I want to make it as difficult as I can for price to get anywhere near my stop loss. Now that doesn't mean that I just set a massive stop that is like 60 pips away. There has to be some logic to where you're putting your stop. And the way I call it and the analogy I use is called the line of defense. So think of it as a football or soccer analogy of where you've got a row of defenders and an attacker is coming towards the goal. Where what we're trying to do is utilize a line of defense to make it difficult for that attacker to score. And it's exactly the same thing when it comes to trading. And whether you're trading stocks or commodities or Forex or crypto, the exact same kind of principle applies. So the kind of 3 things that I look at in terms of my line of defense, they are as follows. The first one is highs and lows. It's probably the first thing you're taught when you look at stop loss videos online around put your stop loss at the low if you are going bullish, or if you're going bearish, put your stop loss above the highs. And that is still relevant today in terms of that. But I think that's not enough. I think you need other criteria as well to kind of get a better stop loss placement. So the other thing that I like to look at is a natural um, support and resistance. And apologies for my writing; I really struggle to write on this laptop slash tablet. And what do I mean by natural support and resistance? I mean around pivot points are a really good one. And round number psychological levels. So, the 100 level or the 50 level. And again, it doesn't matter whether you're trading crypto stocks, indices, or Forex. There are these natural whole number, round number levels which act as a magnet of support and resistance. So when price is going towards these kind of levels, a lot of the times you'll see price bounce around that levels again, making it difficult to kind of break through that kind of level. And then the last one is I like to use is moving averages. Moving averages, you'll see a lot of price reacting or rebounding off a particular moving average, especially the 100 200 EMA, which is what I like to use. So when you're looking at a stop loss and you can incorporate 1, 2, or 3 of those things, you are making it harder. An example would be is that the price has to break a high or a low, has to break through a natural support and resistance, and has to break through an MA. So hopefully that's starting to make sense, or the concept makes sense, that if price has to go through the 200 EMA, through a natural support and resistance level, and then also has to break a low or a high, there are multiple areas there of which price can rebound and reverse in the direction of your trend. And what I wanted to do is just show you on this chart that I've got here an example or 2 examples of this in practice. So if I just quickly go through what I've got on my screen, I've got the classic OGT trend dashboard. And what the trend dashboard does, it gives you a high level pictorial view of whether whether a time frame is trending up, down, or ranging, which is signified inside grey. And again, I'll link to this inside the description. It's absolutely free. MT4, MT5, and now also on TradingView. Again, absolutely free to go pick that one up there. The second one I've got on here, as you can see by these bands, is the classic Bollinger Bands. I'm not going to go into that inside this video. I've got the 200 EMA, which is this red line over here. I've also got round number levels. So this is the OGT round number level, and this is at the 100 level, 107 level, and then we've also got the OGT pivot points indicator. Again, all these indicators are absolutely free. Link is inside the description to kind of pick those ones up. And hopefully this is, oh yeah, and sorry, I've also got these other EMAs inside here, which I'll also link to in the description of what they are. But again, they are dial guppies, MMA, GMMA, long-term moving average MAs, just gives you another clear direction of which way the trend is going. And for those who are frequent subscribers on my YouTube channel and watch my videos, you will know that the indicators that are on the screen now forms part of my Bollinger Bands strategy, which again I'll link to inside the description if you want to go through the whole trading strategy. But effectively what it does is we are looking for price to be in a trend, either an uptrend or a downtrend, which is signified in this example of an uptrend of price being above the 200 EMA. The long-term EMAs are all pointing up and stacked inside the right order. And what we're looking for is we're looking for price to drop and touch the lower Bollinger Band while the EMAs are still intact and above the 200 EMA. And what we're doing is we're waiting for a close above the middle band for us to go long. So that particular setup that I've just shown there is the example we're going to use inside this video of where exactly would I place my stop loss based on the line of defense concept that we have just discussed. So I'm just very quickly just going to get rid of all this stuff as best as I can, and then just walk you through all of that. I was trying to remove the EMA, which is also in red, which can't be deleted because it is a picture. So what I'm going to do actually is just change this color to blue, so I think it'll be a lot easier, and get rid of this as well on there. So as I said, we wait for price to touch the lower Bollinger Band, and then this little bar over here would be the entry signal just above the middle Bollinger Band. And so let's just say we went long around here somewhere. We went long. Where would we put our stop loss? So let's just go through this in a second. So we've got highs and lows as number one. So we could put the stop loss there as an example. Then we've got natural support and resistance. So you'll notice that we have a natural support and resistance over here, signified by the 107 level, and we also have the daily pivot over here as well. So we've got two natural support and resistance levels. If we look at the third one, we've got the moving averages. So we've got all of these dial guppies moving averages over here, and we've got the 200 EMA over here. So we've got quite a few stuff going on over here. And if you saw this trade live, let's just say you went in long over here, price has to go through all of these moving averages here first. If it manages to get through that, it has to go through this natural support and resistance level. You could argue that this bottom band of the Bollinger Band is another resistance level, but let's just say we ignored that. Price then needs to go through the 200 EMA, and then price would need to go through a daily pivot level. So for me, a couple of pips below the daily pivot level would be, in my personal opinion, the best place to put the stop loss. If you are bullish on this on this particular currency pair, and you wanted to be a bit more aggressive, and you wanted to have a smaller reward to risk, you could put it below the EMA worst case scenario. I wouldn't put it below the highs because the EMA is so close next to it, it makes sense just to put it just under that. So as you can see, what happened with price? Price came down, couldn't get through this EMA. So your first line of defense was those cluster of EMAs, which price couldn't get through, comes back down, gets through the EMAs, doesn't quite make it to the natural support and resistance level. But again, you could argue that it was using that as a potential resistance support line, and then price continues to go up. And then if we go across, you can see how high that it went there. So again, this here is a good example of using multiple lines of defenses to kind of get through that. And I just went through the second example, which I was going to walk you guys through on here. So let's just say you missed this setup. Hopefully you guys have seen it. Is we get another touch of the Bollinger Band, and then by the time the Bollinger Band is hit, the MAs are all still lining properly. We're above the 200 EMA. And then we get a close roughly around, let's call it this area over here. So we get a close there. Where would you put your stop? If we look at the lines of defense, you wouldn't put it, even though this works out pretty nicely as a reward to risk, if you did put it just under the MAs, but you probably wouldn't do that. Maybe you can put it here, which is very nice. You've got the EMA and the natural support 107 level together, and then you've also got the pivot point. So in my view, you've really got two areas depending on how close you want to be to your entry price. You've either got this level or you got this level. Either way, it didn't really make a difference because price continued to do that. But again, just showing you here of how and where you can start using highs, lows, and natural resistance, because the low is technically over here, which it made sense that you would put it just below the natural support and resistance level, and your more conservative approach is there. That's not to say that you couldn't place the stop way out, and then as you quickly see the move, this impulse move going up, you move it straight to this level and then start trailing your stop under lows, highs, and all that kind of good stuff. But I'm not going to go into moving your stop loss to break even in this particular video. This video was all about trying to explain line of defenses of where to put your stop loss. So I really hope that you found this video useful. Again, just next time you take a trade, look where the highs and lows are, stick the OGT round numbers indicator on there to see where the natural support and resistance level is, and throw up a 200 day moving average. And when you start to see these all aligning close together, that to me is a best kind of defense, because when you've got all those three really close together, then that makes for really a solid stop loss inside my kind of view. And again, always throw on the daily pivot. It's always good to see where the daily pivot here is. It gets hit 75 to 80% of the time every single day. So again, it's a key level that you need to be having on your charts. Pick up all the indicators that I mentioned in this video absolutely free. Link is inside the description. And like this video, and I'll put up on the screen now my Bollinger Band strategies, which goes through this, which is a fantastic strategy, and perfect for beginners if you're just trying out. I'm looking to build an indicator for this so you don't have to do all the legwork and find out when to place your entries, but check that video out. Got any questions, leave me some comments in the description box, and I shall see you guys in the next video.